Good evening, traders, and welcome to post-Brexit, first webinar after Brexit. Session recap, 27th of June 2016. And well, guys, you could have seen impacts of Brexit. There was a lot of mistake, and fortunately for us, at least it came how we analyzed. So actually, it was a bit of well, I can say a volatility, but fortunately for us, it didn't happen as it was with SM. It won't. Well, it won't happen. I was like 48% of chance that it won't happen, but it happened. So what we can do, guys, now is go with the flow because trading is back in business, right? So you don't need to think about whether there will be some violent movements or not, because we all know that it could happen. But what you can do is just slightly reduce your risk, and once you're in profit, place profit stops. That is the best thing to do. Now, as I say, there were a lot of talks about Brexit, Remain. We all know what UK will be facing. In the short term, it is not good. In the long run, it may be good, right? So that's simply the fact. At least what I can see is that UK managed to actually do something that other countries couldn't have done it, even with central bank small interventions and rumors. Effectively, they dropped the value of their own currency in an instant. And that is something that BOJ has been trying to do for the last 6-7 months. So actually, guys, as you can see, UK Brexit referendum managed to actually they reduce the value of GBP, and that is good for their exports, right? It's good for UK exports because there is no country that can benefit from very strong national currency. So it's good for their exports, but now who will they export to? They need to do agreement, a new trade agreement, FTA, and this could be a process of 2 years, maybe shorter, maybe longer. We will see. But the thing is, basically they don't export that much, Scott. You're right, because they are mainly, basically they're services economy. But at least it's good because they might be, they might get some new FTA, free trade agreements. So we will see. What I know is that there is scope for more downside. That is for sure. And another thing is that, guys, trading is back. And that is what we care now. We cannot decide about the future of a country because central banks will decide what will happen to their own currency, to their own macroeconomy in the interbank market. And ultimately, what we do is, guys, listen now, we go with the flow. Okay, we go with the flow. So we will be trading, of course, with reduced risk until at least this G7 meeting is over. And then we will get back into a normal risk trading mode, like as we usually do. But at this time, markets are tradable. You see, there is no big spreads. Margins are back on track, right? So everything is good. So let's see what we have. Of course, if you still didn't read last couple of articles that I did with Admiral Markets, you can read it on Admiral Markets Traders blog. So refer to Brexit, and I did a early Sunday analysis, and you could really see that I was again right about GBP dollar and FTSE 100. FTSE, it dropped, and now we could see some retracement. Actually, guys, if you ask me, I would like to see some retracement because I really don't like to sell low. I prefer to sell higher. So, but the thing is that all these currencies that were impacted by Brexit are actually, they went down heavily. And I simply would like to see a bigger retracement. So I have prepared setups for this week, but let's see what we had before Brexit. We had a winning trade. It was dollar yen. That was good for more than 100 pips. Euro dollar could have also been good, but the thing is, it was a bit late. Okay, 3-4 days had passed after we did the analysis. So actually, I said, and you will see that later, that actually euro dollar didn't qualify. But well, again, dollar yen was good, so we will see. Yes, Nathan, I will review dollar CAD, don't worry. But at this point, let's see euro dollar pound, Australian dollar, euro AUD, and New Zealand dollar. Yes, the screen is still. I will move the slides now. Risk disclaimer explained that online education materials are available by Admiral Markets Estonia for a global audience. So if you want to get a corresponding information on everything, you should visit www.admiralmarketsglobal, select your country, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Final part explained that Admiral Markets Ltd takes no responsibility for information accuracy. This is solely my opinion, and this is not suggestion for a trade. So Forex is risky business, and this webinar is for informational and educational purposes only. Okay, so we are ready to proceed. Guys, just let's do a quick sound check. Daniel is saying that there is no sound, but I think that actually sound is okay, right? Sound should be okay, yeah. Mario is saying AV okay. Scott is saying sound is perfect. Sound okay. So yeah, okay, definitely we don't have any problems with the sound. Okay. So, Admiral Market Supreme Edition will greatly empower your trading. Download and enjoy the benefits. Of course, guys, web trader platform, you can watch it at this address. Don't forget it. Admiral Market is officially best MT4 broker in UK. One more thing, guys. FCA license will continue to operate fully without any restrictions. So don't worry, your money is safe, okay? There is no need to actually do anything. Everything is all right. And FCA will continue to operate efficiently. And they really made an announcement after Brexit. So everything is fine. Everything will be fine. So you don't need to worry. Your money is safe. Risk disclaimer. All session recap trades and analysis is done with Camarilla MACD. Okay? Now, you need to give price a breathing room, always. We usually enter within 15 pips of the probability level if it's in agreement with the system. We call it a POC or buffer zone. Use scaling in, guys. Okay, use scaling in if you see that there is a possibility for the price to enter deeper within the zone. Respect your stop loss, always. Add a spread to your stop loss. If you're trading from ECN account, then add like in between 3 and 5 pips. It will ensure that you're not stopped out to the pip. And please don't worry about it. Definitely, stop loss is there to protect your profits. So that is why you need to calculate your risk. Because if you trade without a stop loss, well, there will be a day that you could get margin called. Scott is asking, spread is smaller with ECN. Indeed, it's smaller. It's usually in between 0.23 and 1 pip. But I usually say, add that 2 or 3 or 5 pips to your stop loss just to cover for, I don't know, for anything, for possible small spike. Because guys, if you see a stop loss, still, maybe you have 2 or 3 pips spread with other accounts. So just add it. It's not that high, so it won't make any difference. Yes, Admiral Prime accounts, indeed. I have different accounts with Admiral Markets. I have standard account, and I also have a ECN account. ECN account has only Forex, while standard account has equities and other markets. So when I say ECN, that is exactly, Scott, Admiral Prime account. We take only one position, whichever hits first, and that means actually that we either take alternative or positional trade. So whatever hits first, we don't trade both positions. It's either position or alternative. First touch of the zone is the most profitable. That is where we expect the price to react. So the first touch or entry within the zone should provide us with good amount of pips. Okay? Now, position trades are so-called trend trades. Alternative trades are so-called counter-trend trades. Breakout trades and scalp trade levels are done independently. So if you take position or alternative, you can also take a breakout or a scalp trade. Depending on time and volatility, usage of trailing stop is highly recommended. It's usually after 20 pips of profit, not less. So whenever we make an entry, we need to manage it. We never ever take less than 20 pips, okay, on a single trade, except if you see that the price is not going anywhere, or you see that there is no movement, then you can take less. But once you're in profit, this is the minimum number of pips you should make. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All those trades are calculated by historical levels and Camarilla. You can add these levels to your system. Pay attention to Twitter updates, and pips pool is the maximum available number of pips you could have got on recap entries. Past week results, well, euro dollar, all these you see didn't qualify except for dollar yen that went for 100 pips in profit. And we will review it now. This was euro dollar setup. I told you that you could sell at 40.45 around the level. Well, actually, you could see it was good, but our webinar is on 20th of June. So 20, 21st, and eventually 22nd. And this happened at 23rd. Okay, this happened at 23rd. So if you followed my analysis on Admiral Markets and Forex Street, there are actually very good trading opportunities on other pairs, and you should always check Admiral Markets technical analysis page.
or Forex Street, but mostly it usually goes to other markets first. And definitely, guys, I knew that euro dollar was going to fall. I told you that it could happen. And you can see here that it happened exactly at this spot here. And afterward, it made a so-called double top, and then it continued to slide. So the thing is that what I like to see is always retracement, guys. Retracement before entry, because that retracement will usually give us a lot of pips, indeed a lot of pips. So guys, if you watched, well, euro yen analysis last week, maybe this was like the analysis of the week, euro yen here, and what happened is the breakout happened here. So you could have made tons of profits by trading euro yen before Brexit. I hope that you did some trades on euro yen, because this was very clear. Bullish triangle, and we actually aimed for breakout. This could be also a short trade with good risk to reward. It could have been, but mainly because it was a bullish, it was triangle. Well, it's a pennant. So bullish pennant, we aimed for a bullish breakout, and it happened. So this could have been easily the trade of the week. I should definitely make some polls on Twitter, so you, when I see you answering me, I know that actually that was what you liked and what you maybe would like to see in the future. So euro dollar, well, you see it dropped, but it didn't qualify because it happened 3 days later. The pound dollar, I gave no setup due to Brexit. Australian dollar, well, Australian dollar was, as you can see, it was a bit late. Again, 73.95 was buy position, but you see there was nothing happening after 24th. It dropped heavily. It actually spiked because I told you it was in uptrend, and you see that there was a huge uptrend after the webinar next couple of days. Huge uptrend, but well, it didn't make any pullback. Dollar yen, you see that was the trade of the week. Dollar yen, the trade setup was triggered here. We had a sell position at 100.05.10. The pound went to 100.5.06, so 105.06, and it started to drop immediately. It went down 100 pips. So you could have made a lot of pips trading dollar yen. Dollar CAD again didn't qualify, unfortunately. As you can see, dollar CAD, it was in downtrend. We wanted to sell here, and there was a sell actually here. See here, there was a sell for some 50 pips, but it came later, 4 days after our webinar. But still, as you can see, the analysis again was respected because all these trending pairs were respecting the trend 2-3 days after our webinar. Dollar CAD down, down, down. The only thing is it didn't make a pullback. Dollar yen made a pullback, and we could sell it for a huge number of profits. So dollar yen, the trade of the week. Now euro dollar, a downtrend in euro dollar. And I would look to sell at 1070, 1120 stop, 0950 target 1, target 2, 0910. I would look to buy at 1.090890, stop loss 1.0860, Target 1.0950. Reduce lot size due to risk at least, guys, until this G7 meeting is over. Okay. Now the comment, Michigan Young is asking, do you always use a trailing stop of 20 pips? I put a 20 pip trailing and got stopped out in both in profit, both for euro dollar and dollar yen. Then it continued to hit both TPs. Well done. Okay, so yeah, you can, as I say, guys, there are always different ways to manage your trade. As you can see, Mr. Michigan, actually made some good profits with euro dollar. Well, that is up to you. So you can put a trailing stop. How you can manage your trade, it's different. So one way is to, when you see that 25 pip has been made, you can scale out if you have enough volume. So if you have 0.2 lots, at least, you can take out 0.10 in profit and rest 0.10, put stop loss to break even and ride a free ride. If you don't want to do that until 25 pips, you can take all profit if you, for some example, you cannot monitor your trade or you think that there is no possibility it could go down. Or you can take the whole profit, or you can eventually move the complete trade to your break even. So once you're in profit, just move your trade to break even and ride a free ride. What I usually do, I exit partially, I scale out, move my stop to break even, and I am free to do whatever I want, guys. I don't care anymore. It's called riding a free ride. Why wouldn't you ride a free ride? Now let's see the chart. So euro dollar first. As I say, guys, just trade, don't worry about this. You see now the pairs are getting back into their trading mode. As I say, just watch out for possible risk, maybe some interventions after G7 meeting, but still, at least today, I think it's very safe to trade. Just manage your trades with low risk. So euro dollar is a trade that it would be good that it's initiated. So 1070 here, there is a confluence, a lot of confluence. We also have what I don't like to see, it's called a steep trend line here. So maybe it will drop also from this level. He says price is 1.025. So your trade is not qualified. No, it will be qualified if it gets 15 pips close to this position. If you see it very, very close, like 15, 16, 17, 18 pips, just enter the trade. So here you see, guys, we have a steep trend line, but as I say, I'm not sure that maybe it could drop, but if it breaks, then we might see our trade. Nathan is asking, do you think it's a fake out? Which one is a fake out? We don't have any breakout trade to qualify as a fake out. See? So she's still in a trend. So let's see if this drops from here or it goes up. Colored pivot points are actually ATR stop levels. So if you want to have it, you can email me, I can send it. It's the indicator that plots those ATR stop levels, and it's very useful. But for euro dollar, guys, well, I see it could reject from this level. So be careful. If you try to trade this, as I say, it could reject. We are not sure will it reject, but well, yeah, it could reject. I would prefer to see it a bit higher. Okay, I would prefer it to see a bit higher, but as I say, pay attention. Okay, so let's move on to pound dollar now. Pound dollar. Yeah, why alt buying? Yeah, I will show. Sorry, Derek. Yeah, I missed this. 0890, 0860. Let me show you the chart. Here. Do you see now why buying? See this? In near-term history, watch this. Watch this. Watch this. Ah, screen frozen. Okay, yes. Ilya is asking, can I show him setups? He's watching Spain versus Italy. Yeah. Okay, okay. So this is it, guys. Why I would buy around 0890. Okay, here. See a lot of history within 0890, especially here at the near past. See? So I would buy from this region. So this is alternative buy. GBP dollars. Well, guys, everything you could read anything. You could read anything on Admiral Markets website. So pound dollar didn't change. I hope that you made money today with the analysis. I will show you because this was the analysis. Okay, I said it could reject from here, guys. You see, and I was doing the analysis, and it started to reject. So if you followed this setup straight after I finished with the analysis, you could have made 300 pips almost. Because guys, I myself cannot move the market. So I prepared the analysis and I knew that pound dollar was going to be sold. As I said in the video before, I did, well, that was within the article, early analysis of pound dollar and FTSE. I presumed it would drop, and I said specifically it will be more clear on Monday. And for me, guys, this was no-brainer trade. This was a no-brainer trade. A lot of selling here. But Lawrence, it didn't retrace, but I said, look at this resistance here. What I said is actually here. The first zone, red line resistance, is 34.7080, and the price might drop from there. And it started to drop. So you just needed to go with scalps. If you see that the price is making a direct drop, then just go with your own system and try to scalp it. Because in my analysis, you can see like signals, right, for possible trades, but also read between the lines. If you see that something has already been dropping and there is still some room to support or resistance, try to use your own system and trade it. I always like to see bigger pullbacks. But if I don't see a pullback, I could scalp. That is why we have different options. We have scalping, positional trading, breakout trading, counter trend trading, right? So this is for pound dollar. I would prefer to see a pullback. But if I don't see a pullback, I would look to buy around psychological level 1.3000. I think that now, especially because pound broke through all records, I think that there could be some buyers around 1.3000. Now moment buyers, not historical. So now the present and the future of pound dollar is being written. You can easily see that pound dropped to 30-year lows, and because of that, new levels are being printed out on GBP. So I think that there could be some buying here, and that will be now moment buying, not historical. Because that is not a history written on our charts. It was a long time ago, and I don't counted it. So I want to see present and the future being written in pound dollar. I will go through referendum questions, but let's wait now. Australian dollar is in downtrend. We could see a sell, swing scalp sell at 73.70. So this is scalp swing sell. TP is 73.10, stop loss 73.90. Scalp swing is actually something in between intraday positioning and scalp. So that is scalp swing. Sell position sell could be executed around 74.40. Stop loss 74.80, target 73.55, and here there is an alternative buy 72.95, stop 72.75, target 73.55. Let's see. Here, Australian dollar. So this is the level that hasn't been retested, guys, you see? And there is a confluence. It's not that big of retracement, but 23.6 can be used for scalp swing trades. So we could see this is bullish, but you see now it doesn't go anywhere. But what I would like to see is price towards this level, and then I would open a sell, at least for a scalp swing trade. After I make a profit, I would look to see a bigger pullback towards our main, positional trade, guys. That is this. So this could be executed along with this. 74.40. This is a strong confluence here, and if we don't see it, actually let me open the chart. So here, guys, if we don't see a pullback towards 74.40, this zone here could reject it. So let's see. So that is Australian dollar. Euro AUD, well, it's very close to our sell spot, and as I say, I would be a little bit careful. It's end of day now, but it's close to our sell spot, so actually it's very close. Last time I saw it, maybe my pending order was initiated. I will go with scaling in, very small risk on this one. This pair is very volatile. Yes, on my account this has been qualified. You see, this was the top of the hour, and yes, it could go up again, but as I say, low risk trade on this one. So let's see. Euro AUD, only 30 pip stop loss. This is stop loss. So this is from risk to reward. This could be a good trade. Now the risk is that we could be stopped out on this, guys. But well, it's worth the risk. So my trade probably has been initiated on my other account, because the high of this candle was 50.18. So yeah, I had a pending order at 50.15. So my trade is running now. So let's see what will happen. So Euro AUD, this is a sell trade, but well, guys, you see, you need to risk sometimes. It's only 20-30 pip stop loss. Even not a big risk. So let's see what will happen. New Zealand dollar. Yeah, let me show you actually Euro AUD. Here, guys, the logic is simple. Previous sell spot. See here, this should hold. Let's see. This should hold. See? Yeah, we are having an outpour, so there could be a possibility that you hear thunders and lightning, because we have a thunderstorm now, a summer thunderstorm. So if you hear that something is actually, that sounds like a thunder and lightning, don't worry, okay? So Euro AUD here, you see, this is it. The best risk to reward I could see at this point. But as I say, I don't know. I am in a trade currently. So let's see what I will get from it. New Zealand dollar, and then question, guys. Then questions. New Zealand dollar is in downtrend. This is sell position, this is buy position. 71.20 is sell, 69.50 is buy position. So New Zealand dollar, guys, New Zealand dollar. Well, I want to see either sell or buy. I would buy around 69.50, close to these lows here. And I would sell at 71.20. Well, guys, once more, and I will go through slides, so don't worry. Stop for buy trade is 69.30. Stop loss for sell trade is 71.60. And here, guys, you can easily check it here. Okay, well, if 71.20 is hit, we shouldn't see it higher, possibly than this candle here, because it started a drop. Because if this candle also, it's 71.57, so this should hold. So let's see if we get anything from this. Okay. Now the questions, all questions will be answered. Okay, first question, more of a comment. Mr. Martin Pickett, Euro dollar, do you consider the weak opening gap filled? Yay for upcoming review of dollar CAD. Thanks. It is so good to hear your voice. What a week, but as you say, trading is back. Yay for upcoming review of dollar CAD. Thank you. Yes, now we will see dollar CAD. Thank you very much. It's good to see you guys again. And as I say, don't worry, everything is fine. FCA is excellent, doing great, your money is safe, everything. Guys, you just don't need to worry about it. You know who needs to worry about monetary movements? Central banks, guys. Central banks' role is to put the prices of their national currencies into the equilibrium. So don't worry about movements in Forex market. Just trade with a low risk and enjoy. Everything is good, your money is safe, everything is back in normal. This was a joke compared to S&P, guys. This was a joke, believe me. Brexit, great, okay. 2,000 pips on pound, 3,000 pips on dollar yen. But it was expected, guys. I told you, if we see a Brexit, it should drop. I gave you the levels and it dropped. But you know, it wasn't a rocket science. Even a newbie trader possibly would think that it would drop, right? And the difference between S&P and Brexit was that S&P was not announced. Brexit trading was a complete joke to S&P. So don't worry, everything is good. Brokers don't have losses. At least Admiral Markets didn't have any loss, so you're just free to trade as ever. And as I was telling you guys, risk department of any broker should know what to do when events were risky. And really, I was involved at least making it sure with my advices how to treat this event versus risk. And everything was fine and everything was good. And actually, I did a trade today. So I'm also back in trading and I will be trading this. So just I will reduce my risk because of possible maybe some interventions after this G7, during these G7 meetings. So pay attention to that. Okay, so dollar CAD was the first. Dollar CAD is in a huge uptrend now. Of course, guys, this is all correlation. That is why I'm saying, guys, use correlation matrix. Use correlation matrix. It will give you a lot of great information about currency movement. This is my favorite tool on Admiral Market Supreme Edition. Our German office actually did correlation matrix, and I'm really happy. They did a great job, and they will come up also with new enhancements on platform. So yeah, well done, German office. And here you see dollar CAD actually was very good. Very good. I mean, correlations, pound dollar minus 90, euro dollar minus 88. So great. I like to see big correlations. And here, guys, this is W here on 4 hour. So this could spike. But what I would do, I would sell actually dollar CAD. And this could be the zone to actually sell. You see? Well, it's a bit higher, but guys, it's not that high. So you see, this is W, bullish. It's broken, so we might see a continuation. Oh, but here also we could see a possible sell. So guys, pay attention if you want to see dollar CAD, okay? Pay attention to this level here. This was, wow, strong historical selling, 31.40. So something around this level, possible sell. Next sell, 31.60, 31.70. So yeah, 80 actually, 31.70 and 31.80. But now I would only look to sell if you ask me, dollar CAD. Okay, I would only go for a sell because it's too high, guys. It's too high. We don't want to buy high. And here, where we could actually buy the pair, well, if you want to go with long trade, watch for these zones here. Okay, 30, 11, 29, 90 for buying, and this is for selling. So yeah, I would look to sell dollar CAD above. Next question. Nathan, yes, dollar CAD, I did it, so no problem. Next question. Let's see. Don't comment football. I'm recording the match, Mario. No, don't worry. I won't comment anything. Lawrence, it did not retrace like expected. Well, yes, Lawrence, if we see a pound, another retrace, I would sell. Gold analysis. Let's see what I think about gold. Well, gold went long. Mr. George Soros was long. And if you read my tweets, I warned that Soros was long. So guys, that guy knows what he's doing. Actually, he is one of really most famous traders, definitely. And he has been written in the history. About gold, guys, this is a unique Forex pattern that we don't see every day, and I like this pattern. Now, for all of you who are my price action trading school students, this looks very, very, very similar to actually, yeah, we know it's a bullish pennant, but actually what I see here is like bullish advance. It looks like it could be a bullish advance. It's bullish in both sense, because we have a big up, then consolidation within a pennant. But also look at this. This could be a bullish advance. So I would go with a breakout of this pennant to the upside. That is how I would treat the gold. If I see an up break above this pennant, I would go long. Yes. Scott, now it's exactly the level of 2008 crash ships. Indeed, Scott. Derek is asking, what's your opinion about repetition on referendum? Well, Derek, why not? Well, I was pro-European Union. I'm neutral. Okay, I know that there were things that needed to be changed in European Union, and UK was right about some things. Definitely, we cannot say they don't have the right. They were right about many things. But what I usually say, problems should be solved within the house, not outside of the house. So my personal opinion was that they should have stayed, but they should have renegotiated the terms, something like that. There was room to improvement, in my opinion. And a lot of people were watching Euro 2016 football, and a lot of people probably thought, no problem, I will not go voting, I will not vote because everything is clear, we will remain in European Union. I've been witnessing a lot of times that when people don't go to vote, a lot of things can happen. Now it happened, and well, we will see what will be next steps. But it's the fact that it's Euro 2016, and probably a lot of people were really watching football and enjoying, and they didn't want to be bothered with voting. But it was a very important vote. So my opinion about repetition, well, I don't think it will happen, to be honest. But well, legally it could. But well, you know, I'm not sure that it could happen. What could happen, I actually explained that in the video that I did post-Brexit, that the leading party in UK that has a majority in Parliament would actually prolong the Brexit process, because Article 50 first needs to be live. Then after that they should go and they should undergo a process of exiting European Union. But what majority in Parliament can do is actually prolong it, so new elections are being called. So if we see new elections in UK, now this is just my theory, guys. Well, just my theory. If we see new elections, then it could be like in Greece. I have a friend in Greece, and he told me actually that Prime Minister, United Kingdom Prime Minister, should actually should just take a look a bit in the past when Greek Prime Minister Tsipras went from no to yes. And well, you see, in politics anything can happen. Earthquake. Scott is saying, sounds like an earthquake. Stay safe. Scott, thank you for your worries, but no earthquakes. Really, I cannot remember when was the last time I heard, and I actually witnessed earthquake here. Maybe it was like 20 years ago. So we really don't have problems with climate and earthquakes. But yeah, thanks for your worries. Pound yen. Ilya is asking for pound yen. And why do I call it a dragon? Well, the simplest explanation, I didn't made it up, okay? The dragon or the beast is simply because pound yen is very strong in movements. And dragons are beings that are mythologically very, 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 very strong. So pound yen, because of its huge range, guys, watch this. 2,700 pips. The dragon, because pound yen is so strong. And, well, dragon, maybe there is also some connection to Chinese and Japanese mythology, but the beast or the dragon is mythically strong. So traders gave it a nickname of dragon because it moves a lot. It's much stronger, guys, than pound dollar. You see, average true range of pound yen is 600 pips last 6 days, and compared to pound, see, it's it's almost, see, it's 483, and it's a much higher. See, that is why it's called a dragon. You see, it's almost like a third stronger, for 1/3 stronger than pound dollar. Okay. Scott is saying there was no match on Thursday. Yes, Scott, but generally speaking, in European Union, especially now, it's a bit of, we can say there is a atmosphere that people are watching football, right? So it doesn't matter. There was no match on Thursday, but generally speaking, people are in the mood of actually watching football. You know, when something is happening, people like to enjoy, watch the football, go out, talk about events. So, you know, simply what I could see, people were not motivated to go out voting for such an important event. Turnout was not that high. It should have been higher. Simply because of that. It will create additional problems within the European Union and within Scotland and Northern Ireland, but we all know that, right? So I think that there will be a solution that will be beneficial to all. I don't expect a breakout of any world crisis for this, so everything should be all right, okay? Just from trading perspective, well, guys, you know what you should do. Wait a little bit with bigger risk. Try to trade safely until markets are back into the normal range, and simply you will be safe. Sorin is asking, I'm not sure why you don't see my question. Sorin, dollar yen. What do you think about 100 level and intervention of BOJ? Well. Sorin, if you saw my pre-Brexit analysis, I told you that if you see Brexit, 103.50 will be touched and 100.00 will be touched. And it happened. It happened. If we see a drop towards 100 and lower, so this is the zone where we could see maybe an intervention. but don't count on it. Now this is bearish advance. You see, this is a bearish pennant, but also we could say that this is bearish advance. So this could go for a retest of 100, and yes, we could say that there is a possibility of BOJ to intervene. But you don't want to sell here, right? Because if you wanted to sell, you should have sold it higher or after a retracement. Nathan is saying he was good on S&P. Well done, Nathan. That was brave from you, actually. Well done. Stella, this is Camarilla MACD, my own template. But you will just go visit the price action training school, and actually there will be some similar templates after. Do you think that dollar yen will drop? Yes, dollar yen is sell on rallies, but wait to see, be patient. As I say, there could be intervention, but just play safe. Wait for substantial retracement. Wait for substantial retracement. Ilya is asking, is this official or your own creation? I don't know what you're referring to, Ilya. What my own creation? Please, okay, repeat the question. A dragon? No. It's official. It's like it's not my creation. I didn't make it up. I didn't make it up. It was actually made up from traders who were trading pound yen, because pound yen historically has had a huge range. Yeah. Okay, guys, and this is it. We are already over, so please, dollar CAD. I also made comments on dollar CAD. I would look to sell dollar CAD here or there. So I would look for possible sell signals around these levels here and buy signals around these levels. Okay? Yes, Stella, ask for ATR indicator and I will send you. Slides, Michael, Goldis, yeah, slides. These are the slides, guys. Euro dollar, pound dollar. Guys, after 500 pip ATR, you want to see a bigger retracement. After 2,000 pips of a drop, you want to see a bigger retracement. As I said, this happened today, but well, during the time when I was publishing the analysis, it started to drop, and it dropped heavily. Yes, Mario, pound yen is also called gappy. Here, Australian dollar. USD, as I said, this happened while we were having webinars, so pay attention, guys. This is really low risk. I mean, risk to reward is huge, but let's see. And New Zealand dollar. So this was it. Let's see what will happen. Okay, guys, expect new analysis, expect new blogs, expect new webinars. Glad to be with you, and let's make some pips and money. Thank you for your comments, guys. Thank you for listening. And as I always say, trade safe. Cheers, everyone.